when the market's confused, Steve strolls in with a chart and some probable news. Troy fires up Omega like, let's model this mess, while traders at home whisper, please help me stress test. It's the show where the candles dance, volatility takes its chance. Steve says rules, Troy says math, together they chart a hilarious path. Grab your lunch, don't be late, they'll tell you why the market's weird again. Oh, great. They're calling out levels, volatility rebels, equity drama, and index devils. One guy's calm, the other's pressing buttons fast. Is this bullish? Is this bearish? Ah, depends on the past. So tune in, laugh, and maybe learn to. These two make the chaos look almost doable for you. Every Tuesday at noon, hit that stream real quick, because markets are wild, and these two are slick.
Merry Christmas, Happy New Year. Steve, how the heck are you?
Merry freaking Christmas, Troy. Did you get everything you wanted?
Man, I depend on those socks coming in. Post 30, I needed those socks to come in, and they came in. I got the sweaters.
Are you more of a colored sock guy or a white tube?
You know, this is mostly what I wanted to talk about today. It's more about the materials for me than anything else. And I don't mind a thin sock. I don't mind a thick sock, but I do mind if it's too tight. I like loosey-goosey socks a little bit.
Okay.
How about you?
There's a lot to be said about a man in socks, you know?
Oh my gosh. Yeah. Yeah. And I don't wear socks that much. I'm a sandal guy for the majority of the year, but, you know, we're starting a new show in the new year, just Troy's socks. And, we'll get into it a little bit more with that stuff. There was a comment already. The question, did Troy oversleep for this show as well? I overslept for our morning show this morning. Steve, when the kids, I don't remember how old your kids are. When the kids are out of school, time is a warp. There's there's no logic to anything. Everything's just kind of, you know.
It's hard. It's like to get yourself back on track, you got to get the kids back in school. I get it.
It is the rhythm of it. I mean, just getting them to school in the morning is kind of my alarm clock. And so, anyway, Steve, you've been busy trading this morning. What have you been doing this morning?
On the directional day trade front, I took two trades. One was in Microsoft, and that was early. It was kind of around previous day's close and pre-market highs. It made an initial push up to that level, kind of chopped around a bit. And as soon as it started to show a little bit of momentum off that level, I took some calls for a nice win. I did give back some. I tried to add when it pulled back a little bit, and it never rebounded. So I just kind of cut out, but it was still a decent winner. And then my second one was in AMD. It popped above previous day high a couple times early, and then kind of flushed with the rest of the market, made a nice rebound. And when it started to kind of chop under that level, kind of between yesterday's close and yesterday's high, same kind of thing. As soon as I started to see a little bit of momentum off that level, I took calls, and it was a quick winner. I hit 2 profit targets within the first 5-minute bar, I think. And then, again, it kind of reversed very quickly. So that was kind of in and out of that one in about 15 minutes.
AMD, I was telling Steve before the show, I was in a different area of the cigar lounge, and I wanted to take that trade. And I thought about it for a second. I was like, well, could I do this and then switch? Do I have time to watch it? And like a profit target hit within like 30 seconds, it seemed. And I was like, well, they're too late now. I don't like entering in once you're already into the midst of profit targets.
Yeah,
usually.
you kind of had to be ready for that one.
Yeah. So the market, I mean, Steve, the market's just kind of, people are asking what's your year-end prediction tomorrow? Where are we going to end up tomorrow? I'd love to hear what you think, you know, based on price
I
action right now.
try to stay away from predictions as much as possible, Troy.
Well, you're
But
wise.
if the
That's why
people want a prediction, I mean, who am
they
I?
demand it. They demand it.
Who am I to? I think we go lower into the new year. We're at 68. We're right at 6,900 as we speak. I'm just gonna do the over under, and I say we finish under 6,900.
I think that's probably a wise bet. Yesterday, I said, I think it would be hilarious if the market literally pinned 7,000. Just for the sense of humor that market makers would have. But yeah, I think you're probably right. I think everyone's just kind of, no one's trading. I mean, this is the thing that's interesting to me is like, who's trading right now? I know, like, are they in the pits? I don't know if they're in the pits in Chicago. I don't know what they're doing this week.
Yeah, I don't know. I think there's probably a couple of diehard folks in there who can, who will be there in case things get crazy, in case to invade Venezuela like that. But so that they'll be the lucky ones getting all the orders flow. But I think for the most part, yeah, I think most of them are kind of off for the holidays.
Well, this is a good opportunity. We talked a little bit about this, but I would love, the last full trading day of the year. What are your takeaways from this year? Because I have some myself, but I would love to hear just, it's been a crazy year, but every year is a crazy year for different reasons. And so what's your kind of takeaways going into the end of the year and, things you feel like you learned along the way, things that, regrets, aspirations for next year? How you feeling about everything?
Yeah, I think high level, coming into the year, obviously we had the Trump administration coming in, which we had experienced 4 years ago. And, understanding the fact that, he loves to post random tweets and post on his Truth Social, and just kind of being a little bit more aware of that going into this year, which is really why I kind of, I don't even know if I was consciously thinking about it, but I think subconsciously that's part of the reason where I started to kind of gravitate away from selling 0 DTE premium a lot more and refocus on more of the directional trading. I felt like I could capture some decent profits that way. And it proved to do, really well, especially during the whole tariff, the height of the tariff headline news, where things were just moving in crazy ranges. Directional trading really shined in that. So that's probably my biggest takeaway, was just that shift from kind of your steady price action. Selling premium was a little bit easier last year to this year. In my mind, it was more difficult because of those random moves in the market.
Yeah, for sure. And I mean, I have to imagine that influenced a little bit of the idea of, day trading, picking some stocks, getting in and getting out, being a little bit more nimble, as you've talked about. Have you found that to be more helpful in these kind of like tweet driven markets that we're in right now?
Yeah, no question. And it works both ways, right? Sometimes you get lucky and you're in on the right direction, and it gives you that quick pop that those are really fun. Of course, it works the other way, but if you're just buying calls and puts, you've got that defined risk and your position sizing to, with the expectation that, you could get a quick move against you. So, that typically works really well for that type of environment.
Yeah. Yeah. My kind of big things this year were, we launched automation, and, I just traded a lot of automated strategies this year, and my takeaway was that it worked, and that was good. I mean, obviously we built the product, so we hope it worked, but it's a cool thing to be able to see create a back test, trade it, and it work. And it work means in different ways. Like it literally works where it matches the back test, but that I was trading things that seemed to be working. So that was my kind of big picture stuff, is that like I feel really good about moving forward with kind of not trying to discretionarily trade. Now I'll still do discretionary stuff. Like I like following your stuff because I'm the opposite of most people. Like for that type of stuff, I don't trust myself. I want someone who's just a risk manager who's going to get in, get out. And I'm happy to do that stuff all day. My biggest kind of like learning thing was I was doing really, really well this year up until late November. And I over traded discretionarily during that last kind of vol pop. But I think VIX got up to 28 intraday. And I just took way too many positions that looking back were just, I have the bad habit, and I've done a lot better as a trader through the years, but this is the only time this year I really did this where Steve, I mean, I wonder if you've ever been to this. Yeah. Have you ever been so like you're watching the market and you enter a position, and by the time the day's over, you don't even know what you want it to do because you've over traded so much? I found myself late November in that just for like a week, and that pissed me off, to be honest.
Yeah, unfortunately, I've found myself in that situation far too many times, Troy.
Yeah, I've gotten better about it, but I came back from vacation late November, and I was missing the market. I wanted to trade a little bit, and looking back, that was real stupid because it was a great year. It would have been an even better year if I wouldn't have done that. And so,
yeah, I think one thing that that really helped me with that, and you've probably seen this, where I put out to my community 1 month at a time, and I do it on a calendar month basis. But I put out my trade plan. So for like directional trading, as an example, I can only take a max of 3 trades in a day. I have a very set specific size based on the day of the week, depending on which DTE I'm trading. And so that's really helped because I just go into the day and I review those rules every single morning pre-market. So it's fresh in my mind. And I don't really break those rules. So before I did that though, and I didn't have any rules about max number of trades, or I was varying position size based on what I perceived as the opportunity at the time. Yeah, I would definitely find myself doing that a lot more. And so, by placing those more strict rules on myself, that really helped me from kind of falling down that spiral.
No, that's good stuff. And because, even in that, there's a lot of wisdom of like 3 trades, you're probably not taking the same underlying 3 times. And that to me is kind of a sign of like, you're going to be okay because, especially like I'll do options on futures. I'll do ES a lot. And that rule would have saved me some money in November because what happens is you start building up positions that, again, you think you're like, well, I missed that, so I'm going to like adjust. But if you missed something, by its very nature, what it shows you from a day trading perspective is you're not reading it right, and it's certainly not doing what you wanted to do. So just move on to a different underlying, and if you do it after 3 times, like, yeah, it's not working today. Just cut it off, So
I post all my trades weekly, monthly, all the results and all that stuff. But like, what are you focused on? Are you doing mostly double calendars? Like, what's your primary focus, and kind of what's been your best performing for the year?
This year was double calendars and did quite well with those. I have some long straddles as well and some stuff that it's the only secret stuff. I usually just show everybody what I'm doing, but the straddles are a little bit more. I don't want anybody else to know what I'm doing with that, but that's worked well.
How far out are you going with those? Are those short term or more longer?
It's a weekend play that you enter into day Friday and your exit Monday morning. So you're not going for max, you're just trying to just get a little bit from the river every day, But that thing my takeaway from next year is I want to get back into selling some premium. I've never been good at selling premium. You're a master at it. You are so unemotional with selling premium that I find it encouraging. So I want to get into more selling premium next year, at least mix some of that in. I think November, December would have been a lot better. The DCs worked really well. They were in a drawdown for sure in December. And I think if I would have mixed in some premium selling in that, I would have it just would have made it a better overall portfolio. And so, your stuff, you're putting on Elmos all day, you're putting on Condors, and there's just a part of me that just wants to do some of that stuff. And it's not in my nature. It's a weird, but it works. And I want to integrate more of that next year into the stuff that I'm doing, especially with automation. Like, my thing with that stuff is I just don't want to think about it, Steve. Like, I don't want to look at a condor. Condors make me so nervous just for some reason. And so I just don't want to look at it. And I think with automation, it gives you the ability to kind of like put it on and just trust the process of it. I've turned more condors into butterflies / calendars that don't do anything than I can count. Like, the amount of times I've overplayed a condor and just rather than just get out, it's astounding to me what I can do with these things sometimes. So yeah, that's what I'm looking for more this year. I also am interested in just.
Yeah, I think, I do some of the discretionary stuff, like you mentioned, where I'm just. I was going to say, I do some, obviously what I call price action iron condors, where I'm just putting them on, based on, where I perceive some tight price range to be and stuff like that. And like I said, that's something I've really reduced, but I want to do more of next year. But really my best performing, just kind of zero DTE premium selling, has been what I call our British iron condors, where I'm managing the put and the call side differently. And that's my most automated system. That's my most automated strategy. And, it's just sending in tranches all day long on based on time of day. And then I'm sometimes adding a couple tranches here or there. I've also got my stop on the shorts only. So I'm managing the longs if I get stopped out on one side, if there's a big move. But that's been really good. And that, I think the thing that helped me with that is that I set up a completely different account. So for that, I have an interactive brokers account. I use TAT, and I would call it 80 to 90% automated. I'll still watch it and, like I said, tweak little things in here, add tranches, or, sell the longs if I get stopped out, but otherwise it's pretty automated. And so that's kind of forced me to, because it's separate, because that's what it's set up for. That's the only thing I trade in that account. It's helped me kind of not tinker with it as much.
Yeah. No, tinkering don't work. That's the thing. I'm pretty damn good at like high vol. Those are like my times, but honestly, like Liberation Day, Dan and I were laughing about that. I mean, I didn't sleep for like a week because I would trade overnight, and because some of those moves were happening overnight, and I'm good at that. But man, you can waste so much money trying to trade overnight. It's on any given day,
Sounds like, so on Sunday night, this past Sunday, silver has been on this run. And it opened up at 5 p.m. on Sunday evening, my time, and it shot up another 6% right out of the gate. And I'm like, okay, this thing's in play. So I was sitting there watching the Bears 49ers game, scalping silver.
Oh man, dude, it's my favorite. I love it. I was at a friend's house. I was told someone I was at a friend's house Sunday night, and husband and wife, sweet couple. And we were sitting there talking, and the husband was helping with the kids or something. And I told them, like, I get so excited on futures night when something happens. It's on Sunday nights. I just started talking to her about silver, and she could care. The amount of care she could have is zero. And it didn't bother me one bit. I was like, yeah, it's actually 6%. It doesn't seem like a lot. That's a parabolic move. She was like, okay, all right. I will say this. I want to talk about, you had mentioned the wheel, and I want to talk about that in a minute. But one thing I'll say about silver, I just did something that I don't do quite often, where I kind of did I just bought some. I have an old account, a 401k, and I haven't rolled it. And I decided I'm going to just keep this thing, and I'm going to play more speculative stuff. Like, I don't really care it's not a big deal. And so I went to silver miners, and which is super volatile, but they haven't performed. I mean, they're up big this year, but they haven't performed as well as silver, on any given day. And so I bought some silver miners, and then I sold calls because they're juiced with the IV right now. So I bought shares for cheap and then sold some like 2-year out calls against it. And those are fun, but it's, again, I had to shut it down because I'm like, I did it and now I'm done, and now I just leave it, like, because you can just overtrade all day on that stuff. But
yeah, for sure.
Anyway, so Steve, I want to talk about the wheel. You had mentioned this on the Christmas show. Thanks again for coming on the Christmas show, by the way. It was you were one of what turned out to be 85 guests. So I was thankful for it. It was a lot of guests. But talk more about the wheel, because it's something that people ask us all the time. Obviously, we don't have stock in the back tester, but I have a graphic here. Do you want me to share the graphic now, or you want to talk about it?
Yeah, sure. Go ahead.
Okay. Yeah. So what are we looking at, and what is the wheel strategy?
Yeah. So the wheel, I mean, it's, I don't know, it's probably one of the more popular, or, a lot of people who get into options trading. I've heard a lot of people who start with the wheel. And here's how it all came about for me was, I mean, I've traded it in the past, years ago, but it's to me, it was just kind of, it's kind of boring. But I have this, I had a solo 401k. I was contributing to it on a Roth basis. And then, so I was like, you know what? Instead of just, buying stocks, maybe I can roll that into a Roth IRA and do another strategy for the community. So we're sitting there on a Power Hour live stream, and I start asking folks what they would want to see. And I brought up the wheel, and the amount of interest.
Do you know how much interest he had? He had so much interest that he got booted. It's a powerful amount of interest, Steve. A powerful amount, so powerful that you were booted from the platform.
Go. I'm back.
Yeah, there you go.
I'm back.
You're back.
Yeah. So I was kind of gauging interest on different things that folks in my community might want to see. And there's a lot of interest towards the wheel, which I was kind of surprised at, because I didn't think there would really be much of any. And so I was like, okay, well, I'll create a wheel portfolio. And so these are the parameters that I came up with. There's a lot of different ways, a lot of different strikes you can choose, further out of the money. Some people even do in the money options, different durations. Some people do it on a weekly basis, monthly, but these are the parameters that I decided to use. And part of the reason I decided to use these is I wanted this to be a very low maintenance type portfolio. With everything else that I've got going, I didn't need another thing that I was super actively managing. And so these are the parameters I use. So at the top of the wheel, you've got essentially selling cash secured puts. I'm going to be using between 25 and 35 delta, and using a duration between 30 and 60 DTE. If the put, I don't have that on the graphic, but it's down below. But if the put gets to 50 or 60% of credit received, I'll just close it and I'll start over, as opposed to holding it the entire duration. But if the stock does get put to me, so if it goes down and is in the money at expiration and I get put the stock, then the next step would be just to hold the stock and start selling calls against that. Same parameters, 25 to 35 delta on the calls, similar to the puts, and 30 to 60 days out. And then if the stock gets called away from me, so if those calls expire in the money or get assigned being in the money, I would have the stock called away, and then I would start back up. It's a Roth account. I'll be cash secured. I'm not using any leverage or margin or anything like that. And the way that I've decided to structure it is I would do 6 positions at a time. So I've decided I'll do 3 stocks and 3 ETFs. And the stocks and ETFs, they're going to be selected from a watch list of actively traded tickers priced under $150. And the reason is because using 15% per position, the account value is right at 100,000. So $15 per position. So I've got to use stock for $150 or less. Buy 100 shares. That's obviously $15,000 of capital of buying power used. And so even if I'm selling puts, I want that to be cash secured. So if I do get assigned that stock, it's going to stay within that $15,000 position size. And then, so that's pretty much it. I mean, that's kind of the gist of the program. I just got the account rolled over to Schwab, and I've entered 3 positions so far. So my positions, I am going to buy the underlying stock and sell calls just to start the wheel. And then on the other 4 positions, I'm just going to start with selling secured puts. So so far I have 3 positions. One is I bought shares in Bitcoin, which is the ETF IBT. So that's one where I bought the underlying and I sold calls against it. The other one that I sold cash secured puts in was Robinhood. And then the third one, I did this one today on a stock. I did Rivian, RIVN. I sold puts on Rivian. So I've got 3 positions in the wheel so far. And like I said, the idea is to build out 6 positions, and I'm not going to stick with the same 6 by any means. It'll just be kind of whatever I like.
I think you cut in and out, Steve. This is the 4. I think market makers are probably trying to destroy Steve because they recognize this is a powerful strategy, which I get that if that's the case. One of the questions I will ask Steve, if he can hear me or when he hears me again, is what's the difference? Why buy shares in some and sell puts in others? Is there a criteria for that? And then 2, will IV play into his decision? So chat, if you have any questions about the wheel that you've always wanted to ask, that I will fake answer until Steve is able to join again and real answer, I'm happy to do that. I'm happy to give you wrong answers only. And I love wrong answers. You guys know that for years. As you know, this morning I told you that Micron was a Bitcoin play run by Michael Salyers, and to which the chat correctly said, you might be the dumbest human being of all time. And so it is what it is. But I'm interested now because I just did this silver miners thing, and I'm wishing I maybe would have sold puts versus just bought the shares. I wish I had heard of them before. But, you know, it is what it is. Does he have a return? Do he have a minimum return on margin in mind? That's a great question, Stephen. Keep putting it in there. I'm going to get Steve on real quick. You guys keep asking and talk amongst yourselves. Listen, this is the week. Steve, the market makers are trying. They know what a powerful strategy this is, and they're trying to destroy you.
Yeah, I'm not sure what's going on. Everything else is working fine on my end, so I don't know if it's a restream issue or my issue, or is it Cigar Lounge issue? I don't think.
I take responsibility for it, and so it'll be my fault, but that's okay. A couple questions, Steve. Do you have?
I don't know where I was when I checked out, so feel free to jump in wherever.
No, you're fine. Do you have a minimum return on margin in mind for this type of thing?
I do. I did create a little spreadsheet that kind of does a calculator that show kind of the projected return on capital and things like that I'll be sharing with folks. But I haven't decided on like a minimum amount. You know, I'm picking tickers that have good juice in the premiums. So my idea on the 3 stocks that I plan on using are Rivian, Hood, and NBIS, Nebius Group. And they all 3 have, decent premiums to work with. And then on the ETF side, I'm going to use IBIT, UNG, the natural gas ETF, and then SLV. Obviously, it's got some juiced premiums right now. So I'm really just looking at ones that have decent premiums. I'm not trying to predict direction, necessarily. Obviously, the wheel benefits from kind of sideways to bullish action, but I'm just really looking at more of just what kind of premiums I'm getting, and then I'll probably over time kind of get a little bit more mechanical about I want a very specific projected return on capital based on the premium I'm getting and things like that. But right now I'm just kind of looking for quote unquote juicy premiums.
No, that makes sense. And my questions were, and you probably answered this already, but again, I'm in no man's land as far as kids being home and not thinking straight. So how do you differentiate? Like, what are your decision for selling a put versus buying the shares? Is it based on IV, if it's juiced or not?
Yeah, no criteria really at all. I just wanted to. I know a lot of folks who do the wheel already have a stock portfolio. So I just figured I'm going to take 2 of the underlying tickers, 1 ETF and 1 stock, and I'm just going to start with buying the stock and selling the calls against it. And then the other ones I'll start with puts. So no rhyme or reason around that. I think for the most part, I'll be selling puts on the majority to start. But I just wanted to start with a couple that I bought the underlying stock and sold the calls against. No specific reason.
That makes sense. Yeah. So I bought like I said, in this one old 401k, I bought SILJ, which is the silver miners ETF, and the junior miners. And I'm thinking now, like, I just bought the shares and then sold the calls, but I wonder if the juiced IV, if I should have done the puts. My thought at the time was like, I mean, if you're going up 5, 6, 7% a day, I want to catch some of that just with shares rather than just get the puts. Mm-hmm. But I don't know. It's kind of a, lose half and a dozen or whatever they call it.
Yeah, exactly. You never know ahead of time, but
yeah,
that's why I'm just kind of mixing it up personally.
Yeah, that makes sense. Another question. Shout out Romeo, Trade Blocks. What's the thought on capital efficiency with the wheel versus using something like a zebra? Now, you might know what a zebra is. I'm a dummy and I have no idea what a zebra is. So,
yeah, I just really, if I was using a margin account and I was maybe getting a little bit more aggressive, part of it is, like I said before, like part of this is just in this portfolio, I was simply just buying stocks.
Yeah.
It's super low maintenance, might check it once a week, once a month kind of thing. Obviously doing the wheel is a little bit more active than that, but this is definitely not something that I want to be actively managing. If I wanted to really get active, yeah, I would do a little bit more capital efficient things. I would do some zebras, do some, poor man covered calls, do some different things like that, and really try to, juice it up even more. But for me, I'm really just trying to keep it simple is really what it comes down to.
Yeah. And that makes total sense. And just for those who, are going to watch this and don't know what any of this means, what is a poor man's will? When Mr. Mateto asked, is there a way to do a poor man's will utilizing PMCC and non-cash secured puts? Break that down a little bit. What is a poor man's will?
Yeah. Basically, instead of buying stock, you could buy a call instead. Typically maybe at the money or a little bit in the money to try to create synthetic stock. And then that way you're not using as much capital as far as, instead of buying the stock, you're using less capital by buying the call. And so that's why they call it the poor man's covered call, because you're able to use more capital and use options in the leverage that they include, as opposed to using the capital on the underlying stock.
Yeah, no, it makes total sense. It's one of those things. I got into options and I didn't, at my age, I just didn't have a big stock portfolio, and so I never really got into the wheel. But I mean, it can be a powerful strategy, especially if you're okay with owning stock. And it's a
Right.
different mindset. It's a different thing. To Steve's point, you don't want to over manage that. You kind of want to let the mechanics play out and let it do its job. Um, Situation, Steve, where will you just roll? So let's play one out. Let's say it's XYZ stock, and it's $100. And let's say you roll, you are starting with a put, right? And you say, I'm going to sell this put. It's 60 days out. It's a 35 delta put. Okay. Well, it goes up. Are you buying the call? This is a dumb question. I'm just going to ask some dumb questions. Are you selling the call at the same time? Or are you waiting to sell the call?
Yep. No, I'm not selling the call unless I get assigned the stock.
Okay. So it's just selling puts first. And so theoretically, if a stock goes on a tear, over a 160-day cycle, you might just sell, 2 to 3 puts, and you're just going to keep going, and
That's right.
And so then let's say you have a down move and you do get assigned. It's at that point that you will sell the call. Is that right?
That's right.
Okay.
Yep.
Okay. And then it's just rinse and repeat.
Yep. It's just a cycle of selling cash secured puts, get assigned the stock, sell covered calls against it, stock gets called away. Now you're back to selling cash secured puts. That's the whole basis of it.
Yeah. Do you have a lot of people? I imagine I always thought of the wheels like Boomerville, to be honest, just because
Yeah. My dad loves it. My dad, that's all he does is he does the wheel all day long. He loves it.
It's an interesting, I mean, it's the old adage, and I don't know how true this is, but I mean, I've certainly heard that like this is kind of how Buffett sometimes will enter positions. He's not just buying necessarily stock all the time. He's just selling puts on a lot of stuff.
Yeah, I've heard that. I've heard at one point he was the biggest seller of options, biggest seller of puts.
Yeah.
At one point, again, that's just kind of
except for he's doing like
who knows how
Coca-Cola. He's doing like Coca-Cola warrants on Coca-Cola and all this stuff. There's other variations, Steve, and I don't know. They're more complicated, but I mean, I know there's people who do a wheel where they're like, they sell a put, they wait for it to get assigned, and then once they're assigned, they'll actually sell it at the money call and then sell another put because they want to acquire stock sooner. I like your version, honestly, because it's just you don't want to watch this every day.
Yeah, there's other versions too where folks will, if they own a stock or they buy a stock, they will actually sell in the money calls because their whole goal with that is they want the stock to get called away. But if it happens to go down, you may have a 5 or 10% buffer to the downside with your short call. So there's a lot of ways to trade it.
Well, with the official,
some folks do that.
Oh, go ahead.
Some people do that for they have what they call a dividend capture strategy, where they'll buy the stock that pays a really nice dividend right before the ex-dividend date, so they get the benefit of getting the dividend, and they're selling an in-the-money call because they don't want to keep it. They just want to get called away and capture the dividend. Maybe make some money on depending on what happens. But yeah, there's a ton of different ways to do it. But
I was just about to say, now that you've done the wheel, I mean, the final boss is the Dividend Kings strategy, however you end up playing that. So that'll be the one, hopefully next year we just get Steve to do Dividend Kings and go from there. There's a guy I know at the cigar shop who every time I see him, he knows I do options. He doesn't know anything about options. He's like, dude, you got to get on the Dividend King train. And his strategy, Steve, you'll appreciate this. He borrows money and goes into debt, and then he purchased these stocks and to get the dividends, and he uses the dividends to pay down the interest on the debt. What could go wrong, Steve? I mean,
interesting.
Yeah. So
give me about 20 years, and maybe I'll get into more dividend investing.
Yeah, I know it's not necessarily my thing either. So, well, Steve, this is great. I mean, I'm looking forward to talking more about it, and maybe in a couple of weeks we could look at, after the first cycle, maybe look at and see kind of like how it went, look at some specific examples of how it played out. I think it'd be helpful for people to see, how it goes and things like that.
Yeah, absolutely.
So, Steve, what are you doing? So, you're trading tomorrow? I have to imagine.
Tomorrow, the stock market is open all day. The bond market is closed. I think it's open a half day. So even lighter holiday trading. I don't know. I may try to take a one directional trade in the morning, and I'll probably do some British Iron Condors, and then I'll call it a year.
Call it a year. What a year it's been. What are you hoping for? What if you could have a market next year? If the market is listening to you right now and they said, Steve, you get one wish, what's 2026 going to be? What would you like the market to do?
My favorite market is the VIX bouncing between like 20 and 25.
Yes, sir.
If we could just keep the VIX between 20 and 25 at all times, I'd be a happy man.
Yes, sir. Yes. Well, with that, we will go out on hopes and wishes. So we will see you guys in the new year. Thanks for joining us, and I'm excited to see where it goes. There's so much stuff that you do on any given week, and you're always trying new things, and so I love it, and I'm excited to see how it plays out in the new year.
Love it. Yeah, this will be fun. I will. I've got some good ideas of things to talk about that I think the listeners will enjoy as well. So Look forward to 2026, Troy.
Hey,
and everyone else.
It's been a year, and blessings to you. And we will see you next year / next week. So have a good rest.
All right.